is Mayank and welcome back to the channel. So before I start this video, the couple of things. So this video is not a recommendation to buy or sell any particular stock. It's just my personal analysis. So you have to do your own research before buying or selling any particular stock. Second thing, if you not subscribe to the channel, please go ahead and do that. This will encourage me to post more videos and better content. So let's start this. So today the stock we discuss about is Inox-Leisure. So Inox-Leisure is inoxmovies.com. So basically that's a website where you can book the tickets, and it's a multiplex chain, as we know. So PVR and Inox are two bigger brands in India which comes to movie chains. So why are we discussing about Inox today? The reason being, Inox is a company which is a bigger brand in India and comes to multiplex, and a lot of single screen theaters have been closed. So this has created an opportunity for these bigger chains to gain the market share. So right now we know that people aren't going to movies, and they have been shut down for a really long time, and they opened in month of November with 50% occupancy, and right now they have 100% occupancy. But still people are not going to theaters because they don't have anything to watch, and there's no any bigger movies which are releasing from any big banner like Yash or Dharma or anything like that. So this is one reason. The proof is that people actually want to go to movies but they're not going because they don't have anything to watch is that there's a movie called Masters in Tamil which released, and it was released only with 50% occupancy, and it was houseful for 3 weeks on a continuous basis, and it has become one of the highest grosser in Tamil movie history. So considering that part only, we can see that people are ready to watch, but they need enough conviction and enough a good movie to go to theaters and take that risk. Right now the COVID times. So right now there are no movies as I told, but coming down the 3 6 month, if you see next 6 months, we have some very big banner movies which are releasing in theaters. Like Rohi is one which is releasing in like couple of weeks. In terms of big movie, Mumbai Saga is one big brand movie and with big actors like John Abraham, Imran Hashmi. So this movie is going to be a crowd puller. And apart from that, we have movies like Sana Nehwal biopic. Then we have movies like Suryavanshi. I think they'll postpone from April to November, probably in Diwali. They have a movie from Satyam Jayate, and we have a big movie called Radhe. So this particular movie are all scheduled next 6 months. Even Bell Bottom is scheduled for Akshay Kumar Star is scheduled for 28th May. 83 is scheduled for 4th of June. So these are very big brand movies and with very big stars. So these movies are going to be a crowd puller, and they will eventually make everyone comfortable to go to movies like theaters and watch the movie. So in India, India movie is a very like fixed kind of entertainment purpose. Like people go to movies for entertainment. Like in other countries, they have other options and all. But in India, movie becomes a go-to way for like single screen, multiplex, whatever. But this is a kind of entertainment for everyone in India. So movies are going to stay. Nobody's going to stop watching movies. Nobody's going to stop making movies. Nobody's going to stop promoting movies. Movie stars are always celebrated in India, and they will always be, no matter what happens. So right now the price what Inox is available is 307, and they had a 1 year high of 50, around 400. So a short opportunity of around 30% is available when it comes to Inox, and that is a short opportunity, because eventually people will start going back. So it's just about time when things becomes normal for these movies, when these big banners release, and once big things become comfortable with everyone, slowly the sales numbers will increase, and they'll show that they're going to benefit from that. So fundamentally, if you see, there's no stock P in this particular stock because they are making loss for a couple of quarters when the COVID started. And other things, the ROC is very good. So in spite of COVID, they maintained ROC 15.6. That's a pretty good number. And the promoter holding is 47.4%, and they don't have any pledge. So entire 47% is with the promoters. They have very high debt, but this debt happened because of this COVID situation, which money they had to borrow from QIP and other different methodologies, and this is to keep the company afloat. Also, they are investing a lot of money in buying new properties or leasing new properties so that they can capture the audience which is lost due to the shutdown of single screen theaters. So because of this debt, new debt, the debt equity ratio is very high. We'll see how this thing is increased. We'll see in the below when we go to balance sheet. Now we'll see the quarterly results. If you see, they have been increasing slowly over the time, like 2018 March to December 2019. They have been increasing slowly, and then the like COVID is stuck, and June, September they are completely shut down, and December they only made a sales of only 15 crores. So that's a very small number. If you see what they have done in the December 2019 quarter, this is not even 10% of that. And they're same thing. their expenses was minus 30 minus 40, so they this complete shutdown, so no expense. But in that December quarter they had expense of 25 crore because they opened some theaters, and when you open the theaters, even if people don't come, you have a certain kind of fixed cost which is always there, like rental, the salary, the lights, the AC and everything should be running. Even if you have one person in the theater, for that also need to keep everything on. The expenses are fixed cost is always there, so that for that they have an operating profit of minus 10, so they lost money actually. Now we'll go to the profit loss statement on yearly basis. So if you see in March 2011 it was 368 crores, and that eventually increased to 1866 crores in March 2020. So that's almost 6 times increase in revenue for this particular company. But because of COVID it became to 387. So it's almost they went back 10 years, 9 years, 9 years for that revenue, 387 crores. So that is because of COVID. Now if you see, net profit also impacted a lot, and they were always profitable from the year 2011 till the year 2019. They were always profitable. Only they are not profitable only this particular year. So these things reflect that the company is fundamentally strong, their operational is very strong, but the things, because of circumstances which is they can't control, it's out of the control for the particular theaters, they have to take the loss. And since this company is so big, they can afford the loss. Unlike other small chains or small single theaters, they couldn't survive and they had to shut down the doors. And this particular company, along with PVR, are capitalizing on that particular part and those audiences which are lost due to shutdown of single screen theaters. So Inox has opened a lot of new theaters like Kolkata, in Mumbai and other places, and those theaters are going to increase their sales in the future. So Inox also knows that people are going to watch movies, and they need more. The people need more theaters, so that whatever they are not able to watch in single screens, they need some place to watch and enjoy movies. And Inox is giving them option by buying new properties or leasing out new properties, and they're going to run movies. So once the big brand banner movie starts coming out, this particular new theaters will also add revenue to the existing theaters. So if you see the previous number 1866 crores, if you see this particular this particular revenue was based on the existing number of theaters. So they added more than 10 new theaters. So this will increase at least 10 times whatever they have made revenue in the 21-22 quarter. And if you see balance sheet, their reserves have been increasing. Sorry, have been increasing from 254 crores to 861 crores, and then it's been reducing slowly over the time because this money they're using to either pay the debt or operation or anything like that. Borrowings, if you see, it was 302 and reduced consistently and became 110 crores in March 2019. So they're almost debt free. It's a company which has a revenue of 1800 crores in March 2019. So 1663 crores. If a company is making a revenue of 1663 crores and they have a debt of only 110 crores, that is almost negligible. So they can always pay back their debt. But now they have increased the debt to 2773 crores, and that is always because of the money they needed to keep them afloat in the COVID times. So that's why, because of this, as I told you, the debt equity ratio is 4.76. Usually it was supposed to be 0.01 or 0.02, close to that. It was always like that. So why Inox is considered a fundamentally strong company is because they have their debt free company, they are a profitable company, and they have a good brand value, brand recall as well. So because of all these factors, we can trust the company and you can invest the money. So this short return this company can give you, because eventually things will come in fall in place for this particular stock, even for PVR as well. So this is my personal opinion. This is not a recommendation. Again, I told you, so it's a research. But personally, I feel if you have money and you want a short return, even in 6 months, 8 months is what I think that probably 6 months, 8 months down the line, this company will reach the price with pre-COVID level. Even if it doesn't reach in 8 months, if it takes 1 year, so 30% short return in 1 year. So that's a good amount of money compared to other scheme mutual funds or your PPF or whatever investment plans we have in India. So this is a risk-free stock. We all know that since we don't understand stock, some company might not return, some company might give better return. But this particular company, keeping its background and last year, previous year performance and future prospect, and how they are growing, how they're investing in their new properties, keeping everything, considering all the points, 30% to 40% return is a expected one in times of up to 1 year. So This is it from my end. So if you like the video, please hit the like button, share it with your friends, and if you're not subscribed to the channel so far, please go ahead and subscribe, and let me know in the comment section if you have any kind of feedback, both positive, negative, or whatever, that will help us to improve the video quality, and also help us to improve, add more content. If you want us to identify any stock or do video in any particular stock, please let us know in the comment section so that we can do research on that and we can put it in the next video. Thanks for watching. See you later in the next video.